All right, everyone, welcome back for another episode of Carnivore Trades. Just want to do a little analysis here on the FAANG stocks. So you guys know that I've been talking about the potential for disinflation to become the narrative on Wall Street for a few weeks now, almost a month really, since last OPEX. And that might be the case in the near term. Right now we have data that is just nothing but inflation this, inflation that, and so on. And yet the dollar index is rallying higher. Indices like the Russell 2000 are still unable to take out their March highs and actually starting to look like they want to roll over. And we're seeing pressure in names like XLE and XLF. Now, all these names are good in high yield environments, and yet with all this inflation data, they're still underperforming. And essentially what we're seeing is a buy the rumor, sell the news event. You buy the entire winter. And then now that we're actually getting the data, we're seeing some pressure in these names. And we're seeing the NASDAQ 100 outperform as they do in disinflationary environments. So that all seems to make sense to me. However, I don't exactly trust this FAANG breakout. And I'm going to explain in this video why, essentially, like gun to my head, which FAANG stock would I own, and furthermore, why I don't really trust the rally. But we'll just get right into it here. So we're going to look at Apple here. Apple had a quote-unquote breakout today. So we had this gap higher, kind of creating sort of an island here, potentially to reverse lower, who knows. But that said, it's not really relevant. The fact of the matter is it broke out of this previous double top high. And you also have stocks like Amazon, which recently broke through that double top area that it had for quite a while. We've had Nvidia do the same thing. Put in a top in September, and it's been kind of going sideways, and then it's pushed higher there. And then you have things, stocks like Microsoft that just gone straight up, and Google, which has just gone straight up since March 2020. And then there's Facebook, which had a decent consolidation here, and then it's had a nice run since then, although stalling out a little bit. But I'm going to tell you why I don't really trust this move. And so let's just pull it back here. So the bull case is, well, we had a sharp move up, and then look at we consolidated. That's what you want to see. That's very bullish, correct? You have the sharp move up, and then you work off the overbought condition. This is nice consolidation. It's been a long time here, and then it thrusted higher. But we're going to take a look at the monthly time frames, which is the more dominant time frame. Now, Facebook is less overbought than some of these other FAANG names, but again, see, never even came close to the 20 moving average, never even had a test candle on the 20 moving average, and now you're basically, again, parabolic on the monthly time frame. But let's look at Nvidia. Nvidia had a really good consolidation here, right? You test that 50 weekly moving average. It's just good consolidation, right? Well, let's look at the monthly. Absolutely parabolic. Just completely in the stratosphere. Let's see. What about Google? Completely parabolic. Microsoft, parabolic. Apple, parabolic. Oh, but the weekly on Apple is very good. Yeah, what about that monthly chart, though? Never even came close to the 20 moving average. So this is blow off top territory, and I think it's we're setting up to put in a possible bull trap on these names. Now, it doesn't mean they can't hold up for a little bit while we have the disinflation rotation, so to say, but these charts are absolutely astronomically overbought. Now, we are in unprecedented territory. The Fed is doing $120 billion a month in QE, and that quantitative easing was strong enough to push the market from here back up to here, and they're still doing the same amount now. So who knows? I mean, it could always go higher. I'm not saying that's, it's a guarantee, but we have to keep that in mind. However, these FAANG names they're looking extremely long in the tooth, and I know they haven't done enough consolidation on the monthly chart, and so to me that's it's a bearish signal. It looks very trappy to me. And you guys know I've been looking for a move in August, a pretty big pretty big pivotal time. I'm thinking in August, towards the late end of July to the mid-August. I think Jackson Hole is going to be very pivotal. And I think that's where we're going to see the move in yields. Again, if we look at the monthly chart of yields, we haven't looked at this in a while. Actually, I'm sorry. Yeah, we haven't looked at this in a while. But yeah, I mean, this is basically symmetrical consolidation here. And you know, I've said that yields have to do some more backing and filling, and it could trade as low as the 382, possibly up to the 1.2 area on the 10-year yield. But ultimately, that's going to be a buying area for me. I will be a buyer there, assuming nothing changes. For the very least, it will be a very, very excellent swing trade. But I think the yields could possibly move up to 2% after that. So I think it's going to be, I'm really looking at this move in FAANG as being very trappy and being very short term. So yeah, this narrative can hold up for a little bit, but I think it's going to come apart pretty soon. Now, the only FAANG stock, gun to my head, if I had to own one, I actually, honestly, really actually like Netflix. And this is the laggard. This is the one that nobody likes right now. Let's put these trend lines back here. So we got up to gap fill today. That was rejected, which, you know, should be expected. They should defend that gap fill. But again, underperforming. And now, as I'm looking at this, I was just looking at this a few minutes ago. You can see here that we've been in a trading range now for a year. We have to go back to the 2-year chart to see the last pivot high. And that just happened, so July 13th, 2020. Today is the 15th. So we've been in a trading range for a full year. And notice this pink trend line, by the way. This is why charts are so awesome. We put in this little trend line here, bounce, bounce, bounce. Then you broke through it, kind of chopped, tried to reclaim it. It was eventually gapped down. I think this was like on earnings or something like that. Gap down, test the lows, and now we're coming back up, and now it's tagging, basically kissing that trend line there. So that trend line is now being back tested, just like this blue one was here previously. So notice the pivots here, breakdown, you got back above it, gapped below it, and then look where you went. This is an earnings gap as well, and look where you stalled out. We're right at that old trend line. This is why charts are so cool. But to me, without digressing too much, this is why I like Netflix. If there's one I have to pick. If you look at the monthly chart, this is actually pretty good. So you kind of have these little test candles here. The 20 moving average is very close to current price. It's sloping up, and it's not ridiculously extended. So notice NVIDIA, you had this bit of a test candle here, but look where the 20 moving average was when you hit that test candle. You look at Amazon. Yeah, again, a little test candle, but look how far away. The 20 moving average is way away from current price. Apple, not even close. So these things are getting ridiculously extended. And this whole quote-unquote consolidation that you've done over the last, 8 to 12 months is really not, I mean, it's sufficient on maybe a weekly time frame, but on the more dominant time frame, it's not sufficient. So you have, consolidation here on the weekly, but not on the monthly. So if I had to pick one, I actually do think the chart of Netflix is intriguing here on a long-term basis. And you guys know that I'm not too interested in picking up longs here with the market where it is. But if I had to pick one, I do like Netflix. Another one I like is Amgen. This is a Dow company, but it's in a nice uptrend, not extended, not overbought. It's just basically holding this 20 monthly moving average and just really chugging along. Another nice one is Salesforce CRM here. Got this nice consolidation. You had a little double test candle of the 20 moving average essentially on the monthly, and then a little breakout of this flag. May or may not hold, but it's consolidating a bit here and may eventually attack the highs. But again, if the market rolls over, everything's going to roll over. So just keep that in mind. But that's a strong name. Another good one I like is a defensive name. It's Procter & Gamble. This one's holding up really well. Again, not extended on the monthly time frame. Pierced through it during the 2020 panic. Again, back test here, nice reversal candle. Now you're consolidating to attack the highs. So this is a company that can do well even in a recession because they make consumer staple products that everybody needs. And it is not a high risk name. Again, it's a boring name. It's got low delta. But if you're not comfortable being short, if you don't want to hedge, with puts or anything like that, but you're concerned about a correction, this is a potential name to own in the future. So yeah, just wanted to quickly go over that. I just really wanted to get that out there. I really like that chart on Netflix and Amgen. I think they're very intriguing. But I do think that this whole FAANG breakout, quote unquote, is looking very trappy. It's looking very trappy to me. So just wanted to get that out there. You guys take care. Thanks for watching, and we'll see you later in the next video.